Welcome to Trends with Benefits, a podcast by Van Eck with a forward-looking perspective. We explore new ways of thinking about the markets, investing, work, and life. Here's your host, Ed Lopez.
Well, Scott, really great to meet you. I've been, just kind of looking at your background, impressed with your entrepreneurism. Is that a word? Entrepreneurialism.
I don't know if that's a word.
Which is really great. I guess you're an internet entrepreneur, wouldn't you say?
I think that's fair. Yeah.
You're based here in New York currently, right?
Yeah, I'm in the city.
Did you grow up here on the East Coast or elsewhere?
I grew up in Kansas City, moved to LA, and then wound up in New York just over 10 years ago.
What do you think of New York now?
New York now. You mean New York in a post-COVID world? I think it's fine. I think the city's back. I mean, our office here feels normal.
Did you end up staying through COVID in New York, or did you go out?
So I spent time between New York and Aspen. I went to Aspen for several months, but yeah.
Welcome to another episode of Trends with Benefits. I'm speaking with my guest, Scott Lynn, founder and CEO of Masterworks, which is democratizing the art world by making high-end art investment accessible to everyone. It was the first company to do so and to allow investors to buy and trade shares of multi-million-dollar art pieces. This is a really exciting business, and one of the reasons why I wanted to talk to Scott, because there is also this trend generally of fractional ownership of different things, whether it's art or collectibles, things of that sort. But I thought the art world being a world that has been totally dominated by the ultra rich and making that accessible was a really fascinating concept. Scott, welcome.
Thanks, Ed. Yeah, thanks for having me.
Tell me a little bit about Masterworks, how you came up with the concept for launching Masterworks and what Masterworks is all about today.
Sure. So I think, I guess my background personally has really been starting technology companies for the past 20 years, but also collecting art. So I've personally built a top 100 collection, really focused on abstract expressionism for those who know what that is. And, I've looked at the value of my own collection grow over that same period of time and felt like there should be a better way to really invest in the asset class. Our view at Masterworks is this is probably the largest asset class that's never been securitized, that's never had an investment products built for it. We think there's just an absolutely huge opportunity to really build out investment products for it for the first time. And if you take a step back and you just look at kind of the art market globally, it's an asset class that's been around for hundreds of years. Like Sotheby's, which is one of the main auction houses in the art market, is I think 276 years old now. So a lot of these firms in the art market have really been operating the exact same way for literally centuries. There hasn't been a lot of innovation, but yet the asset class has continued to outperform most other asset classes. So happy to talk about that. And we have one of the leading research firms in the art market that does index construction and understand how it's performing compared to other things. But yeah, thanks for having me.
Yeah, we'll jump into all of that as well. But generally, Masterworks, who's your target demographic for your business?
Yeah, so the way it works is we purchase a painting and then we file it as a public offering with the SEC. So these are qualified public offerings, meaning technically anyone can invest, whether it's a retail investor or whether it's an accredited investor. So we have investors across the board. We have 280,000 people signed up on the platform that are investing today. Most people start out investing with a smaller amount and they grow that allocation over time. But our view is that because the characteristics of the asset class are so interesting, everyone should have some allocation to art, just like they allocate to equities or fixed income. And we believe that over time, that'll be the case.
Yeah, I mean, especially in this world of elevated equity prices and super low yields, people are looking for alternative investments. Art fits right into that, right?
Yeah, I mean, we hear that every single day, right? We have over 1,000 phone calls with new investors every day, listening to their feedback on their own investment portfolios, and that's the reality of today. Which is when you look at public equities, even I think most major banks now are guiding public equities over the next decade to return somewhere between 3% and 5% a year. Obviously, fixed income is close to zero. There's not good places to put money. So there's this new revitalization in alternatives, effectively, where people are thinking about new asset classes for the first time.
Yeah. When did you start Masterworks? Was it 2017? Is that right?
We started the business in 2017. It's a highly regulated business. As I mentioned, every painting is filed with the SEC as a public offering. So it took us a year and a half to get the first painting through the SEC. It took us a year just to get the regulatory framework in place for secondary markets so people can trade securities and works of art. So everything we do takes time. We didn't generate our first revenue until the middle of 2019. So the business has really just quickly grown over the past 2.5, 3 years.
What do you think has been more meaningful for your business? COVID and the digitalization of everything, or the SEC's broadening of accredited investors? Actually, you said, well, regular investors can access your offerings as well, right?
Yeah, that's right. I mean, we have people who are investing as little as $500 in a work of art, and as much as $50,000. We tend to focus on paintings between $1 and $25 million per painting. We're launching a painting of that size every 5 days now.
Wow.
So there's really all types of investors on the platform today.
Are you noticing a demographic trend in your investors? Like, is it more younger generation?
The thing that you see demographically with investing in general, and I didn't totally appreciate this until starting Masterworks, is that it's predominantly dominated by men. So from a gender perspective, 90% of the people that we work with are men. There's certainly been a lot of startups that have tried to encourage more investing by women, and I think we're seeing that more and more. But that is something I didn't exactly know until starting Masterworks, just the gender discrepancy in investing.
Yeah, that's interesting. All right, so let's talk about art as an investment. You talked about the history of art as an investment. What are some of the stats that are important for people to understand?
Well, the first thing that I think is important to understand is how different segments of the market appreciate. So if you look at art overall and you break it into different categories, with contemporary being the most recent category, rolling back to modern art, and prior to that, Impressionism, and then eventually Old Masters, is what you see is that appreciation rates decline as you move back in time by segment. So contemporary art for the past 25 years has appreciated at roughly 14% a year. Modern art is somewhere around 9 or 10% a year. Impressionist is 6 or 7%, and Old Masters is 1 to 2%. So you really see declining appreciation rates, we would say, as things move out of fashion, but in very, very wide increments, right? Like what our grandparents would want to hang on their walls are not necessarily what we want to hang on our walls. I think we see declining appreciation rates because of things going out of fashion, but in generational increments. So that really today focuses us as a firm on offering investment products in the contemporary segment and the modern segment. And those are, we think, the most interesting risk-adjusted returns. Obviously, contemporary, we see certain artist markets who have absolutely exploded, like the Banksy market specifically. Over the past 12 months, arguably is up 100%. We see other artist markets that are, up 10, 12%. Picasso, for example, one of the largest artist markets, is appreciating around 10%. And like most asset classes, the higher the appreciation rate, the more volatility or risk there is, and the lower the appreciation rate, the lower volatility or risk there is.
Is there an asset class which has a particularly low correlation to art as you know it?
Yeah, so the correlation factors are really, really interesting. So when you look at how art is correlated with other asset classes, it's very lowly correlated. The highest correlation factor is actually with gold. We're often asked why is the correlation between art and gold the highest? It's only 0.2 based on our data, so it's still low, but we don't actually know the answer to that. I guess both have a store of value sort of characteristic to them. They tend to behave possibly similarly because of that. We really don't know, but the correlation factor between art and the S&P is around 0.1, which really means that, as art prices go up, it's not necessarily, the S&P may not necessarily follow that, and vice versa. So it really acts as a great diversifier as part of an investment portfolio. I think in today's world, with a lot of people having 90% of their portfolio in public equities, they're looking for asset classes that can produce similar returns while being good diversifiers, so that if the stock market goes down, then our prices won't necessarily go down with them.
For advisors or investors that are looking at art indexes that are out there, are those art indexes based on sales prices or certain valuation metrics at given points in time?
Yeah, it's a really good question. So we have the leading research team in the art market, and we do I think clearly the most robust index construction within the asset class. We follow the same methodology that Case-Shiller uses for home price indices. And what that means is we look at every single time that a painting has sold 2 or more times at public auction over the past several decades. And we use those individual returns to help people, to help create an index of our prices over time. And we actually publish these returns on the Masterworks website. So you can go to masterworks.io, click on price database, and see the individual returns on works of art that we found that form the basis of a lot of our indices.
Now, you talked about the volatility nature or the risk nature of art. Well, actually, what you talked about was how some pieces might be a little bit more volatile than others. But in general, how would you classify the volatility or the risk expected investor might expect from art?
It's really dependent on the artist market. So we tend to think of individual artist markets as you would think of any asset class. We look at appreciation rate, volatility, and then risk adjusted return or Sharpe ratio. Some artist markets have Sharpe ratios above 1. Some have Sharpe ratios less than 1. It really depends on the market. An example that I always like to use is actually Monet's market. So Monet is the second or third largest artist in the art market. His appreciation rate is only about, I think, around 7% now, but his volatility is incredibly low. Therefore, his Sharpe ratio is above 1. So he's a really, really interesting artist in that he doesn't have a high threshold appreciation rate, but his risk or his volatility is very low.
Huh, he's a classic.
He's a classic, yeah.
Would you expect, as more people get involved in fractional ownership, that volatility would increase or decrease?
Well, it's a great question, right? Actually, increases in price increase volatility, right? Just like decreases in price. So, our view is that as the asset class becomes securitized and as people can actually invest in it over time, we will see more participants in the market and prices will likely go up. The way to think about the art market today is you really have constituencies in the market that are families, right? You have families that are trading these $10 million paintings with each other around the globe. And the most sophisticated people in the art market are families that have been doing it for generations. They have hundreds of millions of dollars in art, billions of dollars in art. And those are regarded kind of as the tastemakers, thought leaders, most sophisticated people in the market. But there's really nobody in the art market today that's operating like Masterworks, that's strictly looking at the asset class from an investment perspective, has a research team, has a data analytics team. It doesn't really exist now.
Now, are you working mainly with physical pieces that you buy in store and then offer up, or how does digital art come into play? And is that something you might get into?
Yeah, I get asked this question all the time. I think I'm the outspoken anti-NFT person. So we don't view NFTs as investments today. And the reason we don't is because when we think about the definition of a strategic asset class, if you go back to Finance 101, it has to meet 2 criteria. 1, the asset class has to beat inflation. And 2, the asset class has to lack correlation. And I think the issue with NFTs today is even though we've seen a huge explosion in price, a total collapse in price, and a huge explosion in price, we can't really conclude if they're necessarily appreciating. Secondly, we think that prices of NFTs are highly correlated to Ethereum, which is highly correlated to Bitcoin, which is highly correlated to public equities. So we struggle with their role in an investment portfolio generally. The second issue I have, which is just a conceptual issue that I don't know how to think about it. I've asked lots of NFT people how they think about this, and I never get a clear answer. But if we go out and we buy a $20 million Basquiat painting, we actually don't own the copyright to that painting. This is not a well understood issue, I think, on behalf of most people. The person that owns the copyright is either the artist or the artist foundation under copyright law. So when people are buying NFTs, they're really buying a digital image that the artist owns the copyright to. And I mean, personally, I would not pay millions of dollars for something that I have no ownership in. It just doesn't make any sense to me. But that's what's happening in the NFT space today.
Yeah, it's been fascinating to watch and mind-boggling at the same time.
Yeah.
Can you talk a little bit about the process? How do you identify and acquire a piece? Are you going to auctions and picking up pieces?
Yeah, we're buying $40 to $50 million a month now in art. Next year we'll likely buy more than $1 billion. So we're buying across the market, privately, at auction, in lots of different areas. So when we think about what segments of the art market to invest in, we first think about artist market. We're analyzing through our research team lots of different artist markets to understand which ones we think have the best appreciation, the lowest risk, other signals that indicate that they'll continue to grow in the future. And then once we decide on those artist markets, our acquisition team goes out and sources works for or by those specific artists. I think today we've seen 11 or 12 billion dollars in art. We purchased, I don't know, roughly 400, $500 million so far. We're pretty selective with what we buy. Usually when we decide not to buy a painting, it's either because the price is too high or because the example of that particular work and context of that artist isn't the right example. It's not really iconic or identifiable by that artist. So that's, today that's how we think about selecting or investing in particular paintings.
Is there like a catalog of artists just circulating that you're looking through to see what's available, or are you tracking individual artists somehow?
Yeah, it's really crazy. So when we started Masterworks, we weren't even sure exactly how much the art market was appreciating, right? So this was before we had a research team and before we had really constructed indices on the asset class. One of the challenges with understanding the data was that the data wasn't easily accessible. So we couldn't go to a website and download a bunch of art price data and then assemble it into an index. So what we had to do is we had to go out and buy paper auction catalogs going back 30, 40, 50 years, and then have a team of 30 interns literally enter prices for, particular artworks that sold multiple times at auction into a database. And we use that today as the basis of our research data. It just highlights the fact that this is such a large market, right? It's $60 billion a year in transaction volume, but it really is behaving like it's 50, 75, 100 years old in some ways. There's no other industry in today's world that's not quote unquote digitized, right? The art market is one of them.
So after you acquire a piece, how does storage and insurance work?
Yeah, we do all of that. So as part of our management fees, we pay for insurance, we pay for storage, we do any restoration that's necessary. We lend the work out to museums for relevant exhibitions.
I was going to ask, you could probably start a gallery, right?
Yeah, I mean, it's kind of amazing. I do think we'll have the largest art collection in 2 or 3 years. So there's lots of opportunity to really put it on show and work with institutions to exhibit it.
And generally, what are your fees? How does somebody think about that?
Yeah, our management fees are similar to private equity. So we charge 1.5% a year and then 20% of the profit when a painting sells.
And in terms of an investment in art, how should people think about holding period and liquidity?
Yeah, we tell our investors to still think of these as illiquid long-term holds, despite the fact that we have a secondary market. So a lot of people, I think, see the secondary market today and think of these as securities that you can quickly trade in and out of, similar to public equities. That's not the reality, right? Our secondary market is still limited liquidity. If you post an offer to sell your shares at a reasonable price in a particular painting, it's likely that'll clear in days or weeks, but these certainly aren't exchange traded securities. So I think first and foremost, people should be comfortable with an allocation that they can hold for 3 to 10 years, because it takes a while for the assets to appreciate and then for us to eventually sell them. It's not dissimilar to real estate.
Have you seen professional investors like mutual funds or ETFs try to hold shares?
We definitely have. So that's been interesting. So we've seen a lot of fund managers that have strategies that are absolute return strategies that are, I guess inflation hedge strategies would be the wrong word, but real asset strategies that I think are getting a lot of interest in the context of inflation. Begin buying securities. So that's been a new theme that we haven't really seen historically, but probably expect more of.
So how did you get into art to begin with?
I stumbled into it. So I got into art in the late 90s, really after starting kind of my first technology company and making some money. Just found it to be this really, really interesting market. And at the time, the art market was very different than it is today, right? The key difference between then and now is that today you have these websites like artprice.com or artnet.com, where you can go and look at auction data for particular paintings. But back then, those sites didn't exist. So the only way you could figure out value was to talk to dealers or other people in the art market and kind of network around and get consensus on how much things are worth. As soon as a lot of that auction data became publicly available, I think that's when you really started seeing people come into the art market much faster from an investment perspective, because they could really analyze trends and understand how different things were appreciating. But I really just kind of stumbled into it and found it interesting.
Did you start your interest in art as kind of like, oh, I like that. That looks like a pretty painting, or was it more investment related?
Everything I do is kind of investment related. So I wouldn't say it was entirely investment related. The collection I have now, is not the highest appreciating collection personally, but I like it. I've had it a long time. It's art's funny because you sort of buy these objects and you hang them on your wall and they kind of become part of your home, and you grow with them over a number of years. But I made lots of mistakes as an early art collector. I think one of the most common mistakes that people make, which I definitely make, is they go after brand name artists independent of the quality of object in the beginning. So, crazy stat that a lot of people aren't familiar with is I think Picasso during his lifetime made something like 65,000 objects. So, it sounds great to say I own a Picasso, but in reality, there's so many different versions of, Picasso prints, Picasso ceramics, Picasso drawings, napkin drawings, all of these different things that owning a Picasso in itself is not that significant. You can probably buy a Picasso for $2,000. So it's less about the artist and more about the object and how important is that particular object in the context of that artist.
Yeah. Speaking of Picasso, he's had so many different styles in his career, right?
Yeah. He's an artist that when we think of him from a market perspective, and Monet is another example of this, and there's a few others, we actually think of sub-markets within his market rather than the Picasso market overall because of that reason.
Another one I was kind of investigating, looking at some of the artists that you cover, was KAWS.
Yeah.
Fascinating stuff.
Yeah, we really like Brian's work. I think he's never entirely been accepted by the art world. He just recently had his first big institutional show at the Brooklyn Museum. We think he's a great artist. He has global demand. He has a lot of demand from Asia in particular. He doesn't frankly paint that many paintings. So for other artists who are similar to him, his production is just far, far less. So we continue to back his works, continue to buy his works. We just bought one recently. I texted him and said, that we bought it. So yeah, we're a fan of his.
Are you picking up some of the 3D sculptures that he does as well?
We're not. We haven't really done anything with those sculptures. Those sculptures have definitely appreciated in price, but we tend to focus mainly on paintings. It's also hard for us to buy things less than $1 million in today's world because of all the regulatory costs that come with securitizing an individual work of art.
Now, did you find it hard to find supply during COVID?
It's an interesting question. So before COVID, we were buying 100% of things through auction. And the reason we were buying 100% of things through auction is that we thought that auction added this stamp of approval for investors, right? They know it goes through an auction house. They can very clearly see what the lot sold for on the auction house's website. They can read the lot notes, all of this stuff. And when COVID happened, auctions really stopped, right? The volume dropped dramatically within the art market. So we started buying privately. And what we found was that investors didn't really care if things went through auction. We could buy privately and sell those offerings just as easily as the ones that went through auction. So today, I think we're buying 30% through auction now, 70% privately. So the business has really dramatically shifted to private post-COVID.
Now, when a lot of people look at art and look at people and investing in art and the amount of money that's chasing some of this art, and you look at it as a novice, from my perspective, I go, oh my God, somebody's spending millions of dollars on that? I don't get it. Yeah. What do people misunderstand about art, do you think?
Well, everyone who's buying these paintings, if you think about the art market, just in terms of two different segments, paintings below $1 million and paintings above $1 million. Above $1 million, I would say 95% of collectors are buying those paintings knowing that at least they won't lose money. They might not be specifically calculating how much they think they will earn in the future from that painting. I think very, very few get that precise, but they do it with at least thinking there's a store of value in the work of art. It's culturally significant, and it will appreciate to some extent in the future. I think below $1 million, people are more likely to view it decoratively, independent of price. But I tell people all the time, if someone's buying a Boss Cap for $30 million, that's a successful entrepreneur, CEO type who definitely cares about money, spent his whole life working, and he specifically believes that painting will be worth more than $30 million in the future.
So what's one long-term trend you see playing out over the next year or several years?
Well, I think in the context of Masterworks, I mean, we've already talked about the trends that we're seeing, right? So we're seeing tons of tailwinds around alternative investing generally because what I think just the dynamics of public equities, right? Valuations probably cannot keep going up at the same rate they have been historically. Fixed income is returning little to nothing. So I think what we'll see over the next 10 years is we'll see lots of new asset classes emerge, like farmland, which people historically haven't allocated to, things like music royalties, things like artwork. Maybe we'll see more esoteric versions of collectibles securitized. I'm not sure how we think about those from an investment perspective, but there needs to be other ways for people to allocate money. If you just think about the total amount of wealth that's being generated on a global basis and how effectively all of that wealth flows into public equities mostly, that seems like an interesting problem to solve.
So at the end of our segment, we do trend or fad. It's our speed round. And I'll ask you a few different concepts and get your quick take.
Okay, let's do it.
Some of these will be easy. The first one being collectibles, trend or fad.
Well, I would say that's actually not easy, right? So when we believe that art, which is roughly 2/3 of collectibles, is a trend, right? We think there's enough data to show that art is predictably appreciating into the future. I think things like Pokemon cards, I don't know how I think about baseball cards, I don't know how I think about classic cars. I think those could be fads.
How about inflation, trend or fad?
Yeah, that's a hard one. So personally, I would say that's most likely to be fad. One of the great things about running Masterworks is that we have the leading research team in the art market, and we get access to most major CIOs at every private bank. And I think because of supply chain issues, most people believe that inflation is short-lived. There's definitely people who don't. A lot of our investors don't believe that. So I'm kind of saying this against Masterworks' own interests, but I would say fad.
Interest in lesser-known surrealism artists, trend or fad?
Interest in lesser-known surrealism artists. Surrealism in general from an art market perspective, and when I hear the word interest, I'll characterize that immediately as prices, right? Like, will prices go up? I think it's hard. I don't see that being a trend. Frankly, within surrealism, the only artist that we really find investable is Magritte. Even Dali, for example, has had a very, very challenging market. So unfortunately, I think I'd have to say fad on that one.
And then finally, meatless burgers, trend or fad?
I think it's fad. So the thing that I've never understood about this one is if I'm vegan or vegetarian, my dad's vegan. Why would I want to eat something that looks and tastes like meat? I've never understood that. So I would say fad on that one.
Yeah, it's crazy, that space. We just recently launched an ETF focusing in on future of food, and in some of that you have this food tech industry which is just burgeoning, and some of that is just kind of blows your mind, like lab grown meat. Like, oh my God, that's crazy.
Yeah, the cloud kitchens. I mean, I think that's an interesting trend as well. And I have to imagine that COVID has just dramatically accelerated that whole market.
Well, Scott, this has been awesome. Thank you very much for your time. What's the best way for people to find out more about you or connect with you and Masterworks?
Sure. Yeah, LinkedIn is really kind of the best place. And then Masterworks is www.masterworks.io. If you want to create an account, feel free to click the request access button, schedule a call with our membership team. They'll basically walk you through suitability, talk to you about how you're investing today, what your objectives are, what your risk tolerance is, and then make recommendations based on that.
That's great. Thanks again, Scott.
Thanks for having me.
And thank you for tuning in to another episode of Trends with Benefits.